Hey, welcome back
So
to another
been yeah,
episode.
another episode, been a little bit. So what are we gonna talk about today?
We are going to be talking about the markets, status of the markets.
Yeah. Market
how to-
cycles, right?
Market
I think we're
cycles
gonna specifically jump into market cycles, and timing,
and
which,
timing.
which is probably apropos given a lot of stuff that's happening.
Right, because whenever this airs, today in real life is the 1st of May.
Yeah, we like need to state that because tomorrow something different is gonna happen in the market,
Exactly.
right? So it's like
Exactly. I think this episode, the date matters. Where we are in our greater life experience, we are now on day 102 or 3 of Trump
Yeah,
administration.
something like that. Yeah.
Tariffs, some have been deployed, some are in pause. I can't keep up, but
Yeah.
people are, I think, responding in their behavior. It seems like a lot of people are also waiting with bated breath to experience the full breadth of the tariffs that have been deployed and what the impact of those that are looming will be. So I'm starting to feel a little bit of like a pullback. Sales wise, I feel like sales are happening, but they're happening because people are looking to divest themselves from larger scale to maybe something smaller, just in case
Yeah.
they, something that they can easily chew
Yeah.
and navigate.
I feel like it depends what space you're in
That's fair.
exactly. Because I've seen stuff across the board, like some people rushing to go do stuff before it all comes to light, and
Yeah.
some people saying, I don't know, I want to wait and see what happens
Sure.
to see if it even does come to light and what that means exactly. So I feel like retail, I was reading an article like there's a huge recent push of just people buying stuff because they don't know
Yes.
what's going to happen
Yes.
with pricing.
Right. So it's flooding the market with
Yeah.
this consumption, which the after effects may be, okay, great, everything is fine. And I have this surplus of things for maybe, if, whenever.
Yeah.
But I positioned myself. I feel like people are getting very analytical and
Yeah.
thoughtful
Yeah.
about where do I stand in the grand scheme of what's going on or what I perceive to be going on around me.
And I feel like it's kind of been that way though for the last year plus, right?
Yeah.
Worse now, definitely worse now, but not
Yeah.
worse. I shouldn't say worse. I mean, it's a good thing to be
Yeah.
analytical.
Absolutely. But maybe more pronounced
Yeah.
now.
Yeah.
Like
Yeah.
as we're going along, because I think that we're all experiencing something different. We experienced a Trump presidency before, came through it, but now we're in a different space, different time, and he's making swifter movements that impact greater industry
Yeah.
that I think people can see. And because maybe perhaps more people are involved, seemingly because people are like, oh, wait, this does affect me. It's affecting the behavior. And, people, we tend to move in herd behavior. Like,
Sure.
oh, this is what folks are doing.
Sure.
I should probably,
Yeah.
it
Yeah.
sounds smart, so maybe I should think about doing that too. But because real estate is a different asset, I think people are naturally a bit more cautious how they move, but in that caution, they're evaluating market cycles,
Yeah.
where we are, where we're going. Is this a great time to buy because people are afraid? That's what they say.
Yeah.
Do you see that happening? Do you see people moving in real estate to say, hey, let me acquire this because maybe at a better price point than it will be in the future? Or
I think the below replacement cost story right now, if you're acquiring mostly investment real estate, but really any type of, depending on if you're on the owner user side, factor obviously, but like I feel like the below replacement cost story or strategy is even more important right
Yeah.
now as as an investment
Yeah.
strategy, and I feel like a lot of
Yeah.
people are focusing in on that. Like on the apartment side, like we've on our investment platform side,
Mhm.
I should say, we've adjusted our strategy a bit. We were looking previously for some value add type product, and
Oh, okay.
a lot of people in the market feel the same way. It's like very challenging to finance those deals, and find deals that make sense.
Sure.
But and there's also similar factors involved there, but like we've recently been looking pretty hard at high quality deals built in the last like 10-ish plus years that are just, you have the opportunity to buy below replacement cost, because I feel like with where we're at in the market, and
Yeah.
if some of this tariff stuff actually does hit and impacts to some of the levels that people think,
Mhm.
like you're going to be in a really good spot. So
Right.
yeah, so I feel like most investors are thinking about it that way, I
Sure.
think.
Yeah. Yeah, I definitely agree. Retail side, I'm experiencing a demand for smaller second generation restaurant space. They want to come in and leverage something that already is there. So, replacement costs in the sense where they don't now have to add value through the equipment. They're adding value by providing a service and cuisine, um, convenience
Right.
to a community, but something ideally turnkey so they minimize their initial expenses, maximize their exposure, and then hopefully be able to coast on that
Yeah.
in a place where, most people are moving a mile a minute.
Yeah.
Convenience is really at the top of our needs and wants list
Yeah.
to accommodate what we have to do on a day-to-day
Yeah.
basis. And I think that there's an opportunity for people to, in terms of market cycles, get in, but at the same time also maybe stay to the sideline and keep a watchful eye, but have a strategy of what asset class do I want to
Yeah.
leverage and how is that doing so that I can start to create benchmarkers to see what the performance is like and how that impacts my investment.
That makes sense. Now, finding those deals is a different story, I guess, right?
Right.
Because it's like
Right.
you might want them and part of your strategy, but like,
Yep.
can you even find them?
Yeah, because there are
Is the
none.
other
No,
tough
this
part.
the
Yeah.
second generation smaller restaurants. It's like the demand is there, but the availability,
Ability is not.
none.
Yeah.
Yeah.
All right. So then, we're in this like unique time right now where
Yep.
like people are trying to make informed decisions on strategy and direction,
Exactly.
and people are being cautious and very analytical, as you said. But how do you really know where you're at in a market cycle, and what are those things you look for? And I feel like that's such a hard question to
Yeah.
probably answer, but
Yeah.
you know, I don't know. I
There could
mean,
be some foundational aspects. I think it may skew to what people's appetite is for how they consume news, how they consume information, where they go to find that
sure.
information, who they have connections with, who are maybe either tangentially or um, prominently in that industry that can give them feedback. I think if you identify where you want to be, you can start to look at this is what's happening now. It's going to tell a story. So now you just have to pay close attention, kind of tap in. We were talking about our last episode, physically going to the space, seeing it, feeling it, touching it, getting an idea of who's frequenting these places, what services are there for them,
Right.
why are they coming to these places, what does it say about their life, their needs, their wants. Is that something that in times of challenge would they still need and want? I think it now, while there's some activity, but it's nothing hot and heavy, is the opportunity for people to start taking a look and assessing who, what, where, when, why, and how. And in answering those questions, then you can kind of determine now and then look at historically and then anticipate future what could happen and identify where you are in the market
Yeah. Um,
or cycle rather.
yeah, yeah. That's definitely one great way thing to look at for sure. And there's so many different spectrums of the cycle,
Sure.
like,
Agreed.
and they're really blurred. Some of those
Yeah.
lines of where it starts
Because it
and
can transition so
starts and
quickly.
ends, and it goes
Yeah.
back and forth a million times. And like,
Exactly.
if you really don't look at, if you're really not looking at data, like, you know, to somebody who's not in the space and
Yes.
skilled and knows what's going on, they might think, multifamily sales are down this year, so it's underperforming and not a good asset class. But the reality of it is just nobody's selling and you can't make the debt work, but everybody wants to buy.
Mhm.
And you know that by talking to other participants in the market and stuff like that.
Yeah, definitely.
I will say for me, one key indicator to me when a market is like frothy or getting a little too loose,
Mhm.
when you start to see people getting into an asset class or a space that, not to say doesn't have any business being there, but like it's coming from something so obscure
Right,
and
right,
coming into it. And it's not
right.
just like one or two with a strategy. It's like
That's
you see a whole pool of
Yeah, that's a
people.
great point.
Um,
Because something has driven them to say, "Oh, this is the new thing over here." And
yeah,
even though
yeah,
they
yeah,
feel like
yeah.
they're being innovative and like jumping on something new, it's the herding
But they're
mentality.
just hurting.
Yeah.
Yeah.
It's
Like,
true. That's a great indicator.
yeah. I mean, Glenn had said that one time, like, when your landscaper starts running like a fund, like that's a problem.
Yeah. Yeah.
Right. And that
Yeah.
usually tells you like there's some frothiness going on and you
Yeah.
might be, nearing a peak moment where pricing is really high and
Yeah.
competition is outrageous. Could be. Like, doesn't necessarily mean it's happening, but
Yeah. Social media things I feel like can get so
yeah.
sensationalized, and it's sometimes some people have a gift of whittling down things to a point where it feels like 1, 2, 3, 4, 5. I can do that.
Yeah.
If they can do that, I can
Yeah.
do that.
Yeah.
Which is not to say is incorrect, but your proximity to the activity is what sets you apart.
Yeah.
Everybody can have information and knowledge, but if you're not actively moving in the thing, like you said, things transition so fluidly. If you're not paying attention, you'll
You
miss.
miss. And data lags. So like by the
Yeah,
time you learn something today, it's like sort of
exactly.
happened already in real life.
Exactly.
So I think it's so hard to tell like these steps in the
Sure.
cycle. You broader can understand, for me at least, I can understand like where you're close to the
Yeah.
top and then
Yeah.
like where you're close to the bottom.
Yeah.
So
Because
I
that
get,
bell curve is
yeah,
very indicative. It
right,
can shoot up and
right,
then come right back down,
right.
or
And they're like
can be
waves,
steady.
really, yeah.
Right. Exactly.
So like the top, we keep talking about the top, like the bottom. I feel like when as a broker, you covet like off market listings, right? Those off
Yes.
market or off market deals, right?
Yes.
And as a buyer, you do too.
Yeah.
I feel like in the frothy markets, you rarely see those because they go to one person on like sort of a sniper shot and they
Yeah.
get done because it's such a top peak of the market and
Absolutely.
desirability. But like, lately, I personally have been seeing a ton of off market activity over the last several months, but um, and I feel like that's indicative of it's hard to get, not to say we're at the bottom, but like just hard to get deals done. So like you start to see more off market activity from people, right?
Yeah.
Like that coveted thing that you so closely
Yeah.
want. Now it starts getting spread around the room a little bit more
Yeah.
because just deals aren't getting done.
Yeah. I have an off market deal
Right. So you've been seeing it
happening
too.
right now.
You
Yeah.
have it happening too right now, right?
Yeah.
Yeah.
And it's so interesting because stepping outside of this world, let's say you're driving by retail centers, you're just driving on the street, you're seeing auto places, you're seeing Wawas and gas stations, and these things are bought and sold and traded, but you don't know that it's happening. And you may not even wonder about it. But then stepping back into the world of things and having access to the databases where you can see what's for sale and what's not for sale, what do you think drives the behavior of people to connect with someone they know that can get it done and say, hey, I don't want this to be broadcast, but this is what I need, and I'm trusting for your expertise to navigate the channels and you be the MLS person as opposed to me broadcasting it and casting this wide net for everybody to see, hey,
Yeah.
this is what I'm looking to do.
You're asking why does somebody make that decision to do
Yeah.
that,
What
like,
do
or
you
have
think is
that
the
direction?
driving
Yeah.
force outside of maybe like an operating business that they don't want to give their customers a heads up
Yeah, because
on?
it's counter intuitive what you would think, like, you go live, go active, go on market, more activity, more buyers, better price,
Yeah.
like, it's counterintuitive to that, so
Yeah.
you get the question sometimes why people do that.
Yeah.
I think there's a lot of reasons, honestly. I think sometimes there's things going on behind the scenes to the outside public that
Hmm.
they don't always understand. I think there's always a story
Yeah.
there. I mean, it could be, you're in a situation where you maybe have a multi-phase project
Hmm.
and you don't want sort of all the word getting out because it impacts how the rest of the project
Oh, that
proceeds
makes
if you
sense.
don't trade out of it or you don't sell it or don't find that optimal exit strategy right now in the cycle.
Yeah.
You might not want to disrupt your leasing activity if you're in a
Yes.
market or a small product. You have small product where, like, you know people get word quickly and
Yeah.
you don't want to disrupt some of that activity.
Yeah.
That could be one reason.
Yeah.
You may be in partner situations. You may have a lender situation where you
Oh,
don't want your
yeah.
lender being really uh,
Nosy about
nosy about
what's
what's
happening.
happening because
Yeah.
maybe it's not fitting with the original business plan, but
Yes.
you want to procure something and then
Yeah.
have a conversation. Like,
Exactly. When the money is kind of in the bag to say,
yeah,
hey, you're going to get your money.
yeah,
I've sorted out all the kinks
yeah, yeah,
and it looks like it's coming through. So just
yeah,
wanted to give you a heads up on
yeah.
things. Yeah, that's
I
that's
mean, we
great.
we were in a situation where we had a multifamily development site that's part of an HOA.
Ah, yes.
And you don't want to upset the HOA or ruin all the goodwill you had in negotiating and
Yeah.
being good neighbors with them. So you're sort of like cautious about what direction you want to take.
Yeah.
And we, have had multiple off-market conversations because we didn't want to go that. We
Hmm.
don't want to go the public route just yet
Sure.
because we might pivot and we don't want to ruin the goodwill. Like,
Exactly.
when you commit and make a full stance to it, it's like for us it would be a different story. But
Yeah.
I think that's probably why.
That's a great framing. I think it also leads into perhaps what maybe viewers are thinking. How do I get in on off market deals? And they've been sensationalized like, oh, I want to buy off market because
Yeah.
perhaps maybe they think that price point wise, it's more favorable, which isn't necessarily the
No, I don't
case.
necessarily. Sometimes, I mean, go back to your last question. Sometimes people put deals off market because maybe their pricing expectation is too high and they don't
Hmm.
want to go on market too high and then have to,
The
like,
market itself is
yeah, then have
saying
to,
no.
like, so yeah, you're right.
Yeah,
You're right. It's not always the best.
exactly.
Yeah.
So I think again with being tuned in and staying tuned, um, you kind of just have to approach those business owners to say, "How's it going?" Or where do you see your business in the next couple of years? Are you looking to expand? Are you looking to divest? Are you looking to downsize? If you don't have those conversations, you won't know where their head is at. And as a player in their vertical, their space, it may give you a glimpse into the experiences that other operators are having to say, okay, maybe this person isn't ready to sell or lease or
Right.
move on. But perhaps some of their competitors might be in a tighter squeeze or a tighter space.
Yeah.
And then, once you create opportunity for these people who may be faced with a challenge that they don't know how to solve, if you're able to say, hey, I know some people in your industry might be experiencing this. Is this true for you? What does that mean for your business? Does it put you in a position where you're thinking about possibly walking away, or obviously being paid to leave, or scaling your business down, or kind of
Yeah.
asking questions that
Yeah.
would probe and get their thought?
Well, understanding the motive definitely helps.
Exactly.
But to tie back to, like, understanding the cycles and where you're at, I think you have to be in tune with where we're at in
Yeah.
cycles, at least generally, because when you start looking at especially off market stuff, like, it's not to a broader audience all the time. So you don't
Yeah.
really have a good sense of,
It's true.
does this actually fit with where the market's trading and whatnot. And
Yeah.
and that's, seeing a lot of that can sometimes mislead you
Yeah.
almost.
Agreed. Agreed.
Yeah.
That's a good thought.
Yeah, there's definitely a lot going on there. So like when you really think about it, knowing where you're at in the market in a cycle is really important. But how do you know when's the right time? You're an investor or you get a client.
Mhm.
How do you know when's the right time to buy, to sell, to hold, right? In a particular moment in the market. Like,
I think uh, looking at your financial situation, scared money doesn't make money, knowing what you can bear and what you want to yield.
you can't generally answer that basically is where
Yeah.
you're going with this, right? It's like
Yeah.
specific
You
to
have to be
particular
specific,
business plan. Yeah.
exactly, to your business plan, to your appetite for risk. And then you can evaluate the risk based on your appetite. Like
Yeah.
if you want to be if you have money to be high risk, high reward, and perhaps be on the precipice of something new that you feel like might trend
Yeah.
this way. That's a different story than
In
somebody who's like, I got scared money.
you're right. So like generally, yeah, like when you buy, when you hold, when you sell. I mean, generally you buy at the bottom, you
Yeah,
sell close to the top,
exactly.
right? And then you hold it through really good periods. I mean,
Yeah.
I don't. That's generally, but it really there's so many factors that, like you're saying, drive that decision making strategy
Mhm.
in a given period in a cycle.
Yeah.
Like
Because
it's
once
really
you
tough.
evaluate the cycle, but then you take a look at what you have to invest or spend, you can then, I think, identify, hey, these are the factors that I need to see for me to move forward in this asset class with this amount of finances that I have. Or what can I look for that might be a safer investment to that I can leverage in the meantime, maybe have access to that capital in some way, shape, or form. Like, okay, after 2 years, I have access to that capital, and then I get a small increase, and then I can deploy some of that in a more,
Right.
um, you know, risky fashion, or the opposite. But I think evaluating your financial position and the wherewithal that you have to make an investment is where one would start. And then you start looking outward
Yeah.
from that point to see
Yeah.
where am I going to get the best yield for
Yeah.
my investment,
Yeah.
and what is that industry doing, and what does that mean right now?
Yeah, and there's like those external factors, your capital, right? Your debt, like what matures
Mhm.
when, and
Mhm.
do you have extension options, and how
Yes.
expensive is it, and
Yes.
all those type of things. Your
Yes.
equity, what were the requirements there, and
Yes.
what kind of return hurdles do you have to try to target and hit? Like all those factors
Yes.
really play into that decision making. So it's so hard to say. Generally, you
Yeah.
buy low, sell high, but
You have
there's a
to.
lot of things, and I think
Absolutely.
anymore recently, people have been who have the ability to
Sure.
are holding.
Yeah, I think so.
Um,
I think you're right.
if you don't have the ability to, you're selling,
Yep.
obviously, like,
Mhm.
and you're selling at a potentially discount if you're being forced to, just because of where some of that market cycle stuff we talked about earlier. But
Yeah.
I mean, n- how do you set yourself up so you can be in a position to make those strategic, pivotal sometimes moves in a given market cycle? Like, how do you set yourself up? What do you do from day one as you're working with a client? What do you do from
Mhm.
day one? What do you advise them from day one?
Um, if their aspiration or goal is investing, we have to look at what capital you have amassed. Um, and if now is not the right time, then there has to be a strategy of how much are you going to siphon off? What is the goal? What is the goal amount? And or what does that investment asset class require for entry point, you know, mid-level success, high yield success, and where do you want to be?
Yep.
Because you're as you identify those markers, you're doing research. And you have a reason to research because you're constantly asking and answering a question. Okay, where do I want to be financially? What do I have now? What does it take for me to buy into this investment? And at this buy in, what does that yield look like? Is that enough for me? Do I have the wherewithal to put more to yield a higher or better result? What is the risk associated with that? Is it guaranteed that I'm going to get my money back as well as my investment? Or is there a potential that I may not come out as whole as I went in, but it gives me something more valuable than the immediate funds?
Sure.
So there's so many questions, but I think once they evaluate where is it that I want to be from an investment standpoint, and what capital do I have to participate in that? You start asking poignant questions that will give you more pointed answers and kind of peel back the onion
Sure.
to then identify, oh, wow, before I know it, I have a plan. Either I'm at the threshold to invest or I'm not there or I'm exceeding it. So now if I focus on this and I deploy what I say I'm going to do, I invest this amount of money, I now know that this is locked up for a period of time. I have some more money over here. What else can I do? It's a plan.
So you're saying, to answer that question, you're saying plan.
Yeah,
Like, understand your full financial situation.
absolutely. Because then
And
you can pivot. If and when things change, you
yeah,
now know you have command of the information. Like, okay, I've put this money here for 2 years. I'm holding,
yeah,
technically.
yeah.
I'm holding my position. And then while I'm holding, I can still be amassing funds.
I mean, that goes back to fundamentals, really. Like, you're going back to, so answering the question of like, how do you guide somebody so they can pivot and that person can pivot and manage through
Yeah,
like the cycles. It really goes back to just the fundamentals, like
absolutely.
understanding your current position and what your short and long term goals are, and
Yes,
how you manage around that stuff. It's like day
absolutely.
one planning, really, is the answer.
Yes, very much so. Because you can always pivot, but
S-
if you're not regularly putting capital to the side, and if you're not regularly in tune with what the plan is, so that it's kind of like a living, moving, breathing plan,
Yeah.
life is not going to stay stagnant, and life's circumstances pretty much have an effect on most investments. It may not be immediate, it may have a long term effect or short term effect, but it's likely to have some impact. So it's interesting because we were talking about passive investing. When you're deciding, you even if you are passive in a way, you've already deployed the capital, you're not really. You're always looking at how does this what's happening fit in with my
Yeah.
plan? Do I need to pivot from this based on this information to say, okay, when I get these funds back, I need to go over here because this is what's happening.
Right.
It'll yield better results. Or I can stay right here. I'm seeing the return and I'm happy with it. It suits my lifestyle.
Right. Right. So you're really successfully managing through cycles,
Absolutely.
being successful, and that could be outperforming, doing a phenomenal job, returning, earning a return,
Hmm.
or simply just coming out with your shirt off in a down cycle.
Hmm.
Really starts with planning,
Yep.
and then I think you could probably, part of planning. So going a little bit deeper, part of planning I think is just thinking about how you structure your debt, how you structure your equity,
Yes.
who the people you put in place, the basis you buy at,
So
right? Like all that
important.
is so important.
It is.
Really
Not
understand.
one piece is like, oh, this one is more important
Yeah.
than the other because they all meld together. It's like the waves. You're working together and moving through things together, being communicative, looking at what's happening,
Yeah.
vetting those people so that you can know what they're saying and do you trust what they're saying?
So if I personally had to pick one thing,
Hmm.
I would say your capital structure
Yeah.
is the most important in
Yeah.
my opinion.
Yeah,
Like
absolutely.
if you have like a really soft, we'll call it equity structure, meaning maybe it's all your own capital,
Hmm.
discretionary, right? Or maybe it's a set of partners or equity that like will go along with the ride and won't,
Yeah.
claw back at you with any triggers or
Sure.
take over or force you to do anything. And you have no debt or very little debt on it. In a down cycle position, you're in a good spot
Yeah.
because you don't have high leverage, you don't
Yeah.
have equity partners or partner that's like forcing you to do something.
Absolutely. Peace of mind
Yeah. So
and control
even if you
to
bought
a
too high,
degree.
yeah. So even if you bought too high, even if you didn't save up the or not save up, but like accrue the right amount of reserves,
Yep.
or you missed XYZ on the operating and pro forma budgets, like you could probably weather that storm with just some holding
Yes.
power. But if
Yes.
you put like too much debt, you're over leveraged, or you've got a hard lender, we'll call it,
Yep.
or a
Who's
hard equity,
yeah, who's looking for their money no
you're
matter what.
you're in trouble.
Yeah.
And I think being able to mitigate and manage through ups and down cycles, that's the personally the best way to do it, in my opinion.
Yeah.
Focus on the debt equity, focus on your capital structure. I think that's most important.
I agree. I think the two go hand in hand. It's almost like 1A, 1B, because your plan is also going to give insight into what can you tolerate,
Yeah.
and what you can tolerate is going to also speak to the structure. If you're smart, you evaluate, hey, this, okay, if I structure it this way, if things hit the fan, this is what it's going to mean. Am I in a position to weather that and hold through that based on this structure? So you're vetting the structure, and when you say okay to that, you have peace of mind knowing that
Yeah.
I chose this based on what my strategy was, and I'm okay with that. And the less people you have clawing at you for your capital, your reserves, when you are investing and you're riding through or seeing what happens, course correcting,
Yep.
whatever the case may be, the less noise you have
Yeah.
and the better foundation you have, the more peace you will have and the more opportunity you will have to make informed and not emotional decisions
Yeah.
that could then lead to knee jerk, like, oh, I'm going to do this. No, no. We decided. We made a strategy. We executed.
Right.
We are moving
Yeah.
with the wave.
We put it in place for a reason. Yeah.
Exactly.
So this conversation has been really good.
think so, too.
We started with tariffs, and then we
Yep.
transitioned to off market stuff and ups and downs and cycles and things to do. But I think to round it out, I think it would be helpful to talk about you've made a decision, you're in the process, things aren't going your way.
Yeah.
How do you pivot? How do you pivot? If everybody has the ability to pivot.
Sure.
Right? You
Agreed.
might be in a very
Yeah.
rigid box with your debt and your equity,
Yeah.
but you have the ability to pivot.
You do.
And you have the ability to head that off, right?
Mhm.
So like what do you do? What do you do to be able to put yourself in a position that allows you to adjust in the right way for a given deal in a given market?
I think learnings.
Yeah.
Looking again where you are now in this space where you're realizing, holy cannoli, not
Yeah.
going as I planned. Why is that? Is it because you should have been somewhere else? What can we glean?
Should you have made a different decision?
Yeah, what
Like
can we
think look
glean from what
gr-
happened?
growing on that past experience.
Yeah.
So action, I think. Like you can solve literally anything with action.
Yeah, that's true. Because if I think just identifying like, oh, this is not going right, that's your first step of action. Because if you bury your head in the sand and you don't pay attention to it, it's just going to continue
Yeah.
to exacerbate the
Yeah.
problem.
Yeah.
But the moment that you look and you're like, oh no, what's happening? This is not the intended result. What do we do next?
Yeah.
And that action,
Yeah.
I think, like you're saying, it can help you course correct.
Action, and it's action, to your point, extending on or building on the experience component,
Mhm.
right? And that could be experience you've had in past deals. It could be experiences you're going through right now.
Yeah.
Like making decisions and taking action, developing strategy constantly
Yes.
before it's too late. Because
Yes.
once it's too late, it's like moving that ship is like,
yeah.
you can only turn the wheel
Yeah.
or
Well,
rudder,
hey,
rudder,
the
whatever
rudder,
you
yeah.
turn in a ship. You can only turn it so quick, and you can only move so fast.
Because of the weight behind it.
Yeah.
And that is a great metaphoric example, because there's so much weight that you place in your investment. Because even though you don't want to be emotional about it, still there's some emotion tied to it.
Yeah.
But when you can look at it and identify and say something different needs to happen here? What is that something different that needs to happen? What resources can I pull my people and say, hey, this is what I'm thinking?
Yeah.
You kind of have to make a decision and then say, hey, partners, or hey,
Start those
advisor,
conversations. Yeah.
start those
Yeah.
conversations, get intel, continuing to decide.
Have educated
Yeah,
conversations and like,
educated conversations to where you get to a place where you're like, got it. This is going to be the best direction for me. I'm pivoting over here. I've mapped out what the implications of my pivot is, the ramifications of my pivot, what that is going to impact in the future and the immediate now. Am I okay with that picture? Because I've learned that this way, the way I originally thought was going to work, isn't working.
mm-hmm,
That's okay. I can move over here. And what does it mean for the greater
mm-hmm,
picture?
mm-hmm,
And then you can get some peace back
mm-hmm.
about what's happening.
Yeah. 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 That's good. It's good advice. Yeah. I mean, look, it brings us back to there's ups and downs in markets. There's things that are happening today, right now. There's stuff that
Yep.
happens constantly
Yep.
and in waves.
Yep.
Sometimes it's predictable and sometimes it's not. Most of the
Exactly.
times it's not.
Yep.
But constantly taking action, and sometimes that action is actually making decisions, and sometimes it's just studying what's going on and talking to participants
I
and
agree 1000%.
your trusted broker partners, your trusted legal partners, your other lenders in the market, just
Yeah.
like understanding what's going on so you can take the right action, whether it's now or when it comes time to. But
Agreed.
that's the key, I think.
1000%.
Yeah.
The passive investing, like you illuminated for me last time, there really isn't passive investing. You always want to be learning at minimum,
Yeah.
and that's still doing something. You don't necessarily have to be calling your broker every 5 seconds, panic, because information will give you some peace. Information and the right network of people can give you some peace about the decisions that you have made and or are planning to make, so that you don't feel like you're making them in a silo and you're not making knee-jerk reactions. You're making planned strategic decisions based on your ultimate goal, optimal goal, and what you can stomach.
Definitely. Yeah.
I feel like that part is checking in with your stomach and being like, can I do this?
Yeah.
It takes a lot. And
Yeah.
because then it takes a lot of the pressure off of the partners that you're working with, so they don't feel like, oh my God, this person, this is their scared money and we feel it. Like,
Yeah.
because then it may hinder the interaction. It's like, oh, every time I talk to this person, it's kind of doom and gloom, and then I have to get them back. No, you want to be level-headed, and having information and making strategic decisions, I feel like, will give you that foundation and continue to reinforce you're in a cycle of things. You're moving with it. You're not just plunking and walking away. Even though you've released it, you still have an attachment to it, and you can navigate it from afar with your people.
Absolutely. Absolutely. All right. So this was a really good episode.
I think so too. Thank you for your insight.
Last question. Are you buying right now or selling right now?
Ooh. Selling. I think selling.
I'm buying.
You are.
Yeah.
Somebody told me, I heard something on Instagram, and they were like, buy XYZ, stock and so on and so forth, because it's down right now. I think you're right. I think maybe it depends.
It depends, right?
It depends
the
on
answer.
what it is. It depends on what
it is and who you are and what your situation is.
Exactly. Back to the same cycle. It's a cycle of series of questions.
Yeah.
To identify. But I think if it's super heavy, and it could possibly be like the thing that breaks the straw that breaks the camel's back, get rid of it.
Yeah.
But if it's something where you can withstand a storm and you feel like,
so sell bad investments, buy good investments.
yeah,
Okay.
if you can handle it no matter what, if you can handle it and everything turns to poop and you've got $5 to your name and you can still handle it, buy all day.
All right, cool. Maybe we'll go into more detail next episode, but
Sounds like a plan.
Alright, cool.
Awesome. Bye, everyone.